Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, February the 10th, and we're looking at our midweek review. Let's look at our news items for this morning. Remember, we had a very light week in reference to reports yesterday and Monday, but today, of course, we just received the information about inflation. 0.3% is what they're expecting. That's exactly what we got as CPI and core. We actually had no increase whatsoever. So I guess good news for the market is the market continues to rally to the upside. Incredible market. I just was noticing in an analysis this morning from this bottom here that we established here back in February 1st. The bottom that day was 36.50, That was the low of the day, 36.50, till this present moment. We have a new high of 39.28. We have expanded in the first 10 days of this month over 270 points. 270 point extension in this market as two things: the continuation of the vaccine rollout. Number two, more states and more counties beginning to open up the economy. And I think that's what's really driving this market. I think that's really what's driving this market. But from a technical standpoint, all of this has been discounted. And we can see the market continuing to move because we have no reason to move lower. Remember, we have very few support levels at this point, anywhere near where we are. The nearest one is obviously this particular 20 SMA, which, by the way, the run from this area, from February 1st to this area, right now, 38% retracement line aligns pretty well with this 20 SMA. I'm not calling for the market to go down there anytime soon, but I'm saying, markets need to, healthy markets run, retrace. And remember, we're moving up in very low volume, extremely low volume. We didn't even have a million transactions yesterday. So remember, the less people you have at the store, the quicker and the quicker your sales drop. So when you have a few people buying a lot of items, it's not as good as a lot of people buying a few items. You know what I'm saying? So if you have a lot of more people, you have a lot more value. The moves are steady. The sales are steady. Sales can continue. But when you have very few people participating in these purchases, these price levels don't hold very well. And when we have corrections, they seem to be very violent. Let's look at our other analysis time frame here. As you can see, I did a fib from this run here, from the originating run. Remember, this was the February part, all the way till we currently are, and an extension from this run to this particular swing here. And then you can see those are potential targets to the upside. Our 100% target here is right around the 39.94 area, around there, about 4,000 or so. And then we, of course, move higher. So we'll keep those there just in case to see what happens. Let's look at our neo trade chart here without any indicators. As we can see, again, intraday low, high, intraday low. Market hits bottom quickly after this tremendous run down. Market starts to gain steam, slowly but surely, same pattern, up, oscillations, up, deeper retracement, another deeper retracement, breaks through in pre-market, and we have this huge mess over here. Market eventually breaks through this particular consolidation. So we do have some key support areas to look at here. If the market cannot move lower, if higher immediately, these are potential support areas. Anything below there, of course, we're looking to this particular area here. Now, the market can hold here, potentially hold here, and move higher. That's the one scenario. The scenarios can just immediately try to test, and potentially either one of these moves can produce this here. It could be this move here, it could be this move here, or it can just fail altogether and come back and retrace. So that's what we're looking at first. We're waiting for that first move to confirmation. Take care. Have a great session.